Hi, Jonathan York from Bay Financial Partners, looking at investment markets. It's really going to be pretty interesting to see how the events in Brussels now impact on these markets. Initially, there's quite a sharp sell-off, but sort of markets are sort of recovered to be pretty sort of unchanged now. It's just going to be interesting to see how it sort of pans out over the next sort of few weeks. Also as well, it could be pretty interesting, could have a pretty major impact on the US presidential election. Obviously, Mr. Trump has been pretty vocal on his ideas for dealing with ISIS, and it'll just be very interesting now to see how that sort of pans out and see if it does sort of follow through and sort of strengthen his support towards the Republican nomination. Interesting in the US as well, there's been a couple of comments on the tape recently from a couple of Fed officials that sort of looking that inflation in the US is maybe a little bit stronger than first anticipated, and that may just see interest rates sort of moving up a little bit sooner than first anticipated in the US as well. Obviously with the start of the year, the market's very nervous and the sort of interest rate hikes got sort of pushed back a little bit. But if you look at the data in the US, certainly it's growing at a pretty reasonable rate, and also there does appear to be a little bit of inflation coming through as well, which is obviously good news in terms of the economy growing, but the flip side of that is that maybe interest rates go up a little bit sooner than anticipated. Just on that inflation front, it's interesting to note that oil is now holding above $40 a barrel. Now, if you think back in February, it was down around sort of $26. So that's a pretty major rise over the last sort of 4 to 5 weeks. Here in New Zealand, the latest growth figures were pretty reasonable actually, a little bit stronger than anticipated, sort of plus 0.9. Gives a year-on-year sort of 2.5%, which is pretty acceptable in this current environment. Again, you saw that surprise cut from the Reserve Bank, and it's just going to be interesting now to see firstly Fonterra's results and what sort of aid package they might come up with the farmers in terms of help, and then just see sort of how that sort of filters through over the next sort of 3 to 4 months. Obviously here in New Zealand, income is still a pretty major sort of driver out there, and with the sort of term deposit rates falling, and the current slew of bonds that are being issued, of which there's another one coming through from Auckland Council. That's going to be a 4-year bond, and that's looking like it's going to be sort of well below 4% for that fixed term. But as discussed here many times, there are other options out there in terms of high dividend shares, etc. And if you're interested in exploring some of these options, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.